Okay, you guys, we're now moving into Chapter 7, which deals with budgets. And we're going to look at a few different things in this chapter. If you took my managerial accounting course, then you remember in the budgeting chapter there, we looked at a cash budget. So I thought we'd look at some different ones here. We're going to begin with a cost of goods sold budget. Of course, cost of goods sold, inventory cost or finished goods inventory cost, which is an asset, is transferred into cost of goods sold as the finished goods are sold to customers. So it goes from being an asset, finished goods, to an expense, cost of goods sold at that point. And the three components that comprise finished goods inventory or cost of goods sold, of course, would be direct materials, direct labor, and our applied overhead. Now they're wanting us to prepare this budget for the year 2013. So the beginning of the year numbers they give us would be actual numbers. Everything else would be an estimate. So they start with a heading: Kenwood Manufacturing Company, cost of goods sold budget. I always like, let's see if we can change this. I doubt if we can. Yeah, maybe. On a budget, it really should read for the year ending December 31, 2013, because it hasn't happened yet. It's a budget for the future, right? Now, to get to the future, you have to have the flux capacitor. I don't know if you guys are Back to the Future fans, but we just had the big anniversary. It's always a big movie in my life, but that has nothing to do with cost accounting. Let's move along here. We'll start with finished goods at January 1, 2013. That's given as $13,900. Okay, and this template just walks you through it. We'll go work in process inventory on January 1. Okay, that amount was $25,800. Okay, our direct materials inventory on January 1. Beginning inventory of direct materials, that was $36,000. Direct materials purchases during the year. Now, remember, I said these beginning inventory numbers, we know those. Any of these other numbers have to be estimates if this is our cost of goods sold budget for the year ending December 31, 2013. Okay, our direct materials purchases are estimated for the year to be $548,000. Direct materials available then would be our beginning balance plus what we purchased. So I'm going to add those two together. You get $584,000. They don't give you quite everything. I had to type this one in. We want to subtract out our ending direct materials inventory, which again would be an estimate. They expect that to be $23,000. And that'll give us the cost of direct materials used. And I hope that makes sense, you guys. We'll take our direct materials we had to start the year, plus what we plan to purchase. That's all we had, right? Subtract what's left in direct materials inventory at the end of the year, or what we've in the past called raw materials inventory. And that difference would be what we used during the year. So I'm just going to say $584,000 minus the $23,000. And that gives us $561,000 cost of direct materials used. Okay, they give us our direct labor cost. That's the estimate for the year, $395,500. Our factory overhead estimate for the year is $481,000. So our total manufacturing cost, now we're going to add these three, Cost of direct materials used, direct labor, and factory overhead, the three we mentioned earlier, our manufacturing costs. We're going to sum those to get $1,437,500, our total manufacturing costs. Then to get total work in process during the year, we'd add that year's manufacturing cost plus beginning work in process. So it's going to be beginning work in process plus everything added to work in process throughout the year, total manufacturing costs. So a total work in process during the year, $1,463,300. Then to get cost of goods manufactured, we need to deduct ending work in process. So we'll say less work in process December 31. They give us that estimate. 27,300. And that difference would be cost of goods manufactured. The total that we had in process during the year minus what's left in work in process at the end of the year gives us cost of goods manufactured, $1,436,000. Now, we'll take that and add it to our beginning finished goods to get cost of goods available for sale during the year. So what we had in finished goods inventory to start the year, plus what with the finished goods that we manufactured during the year, we're calling it here cost of goods manufactured. If we add those two together, we'll have our cost of goods available for sale during this year, or our estimate of that. So I think I'll use my sum function here. $1,449,900. But to get the cost of goods sold, I think, did we sell everything we had available for sale? Well, usually a business doesn't. And they didn't here, or they don't expect to, because they expect their ending finished goods inventory to be 24,200. So we'll say less finished goods inventory December 31. They estimate that to be 24,200. Okay, so 1,449,900. That's everything we had available for sale, or all the finished goods we had available for sale during the year. We estimate that 24,200 out of that will not be sold by year end. So the difference in those two is our estimate of cost of goods sold for the year. $1,425,700 cost of goods sold, or our estimate of cost of goods sold for 2013. You guys, after working this one out with me, I don't think you'll have any trouble with your homework problem. That's exercise 7-4. And that's also on page 381. Thanks a lot.